Now at 4:45, as expected, the Federal Reserve Bank today decided to keep interest rates where they are. So that means the current benchmark rate is between 4.25% to 4.5%. Now, this has not really changed since December. Financial experts say today's decision is really a sign that there is still too much economic uncertainty with consumers. President Donald Trump has publicly urged Federal Reserve Chairman Jerome Powell to lower those interest rates after a new unemployment rate showed job creation slowed down in May. But here's what the Fed chair said today after making that decision to hold the rates steady.
We believe that the current stance of monetary policy leaves us well positioned to respond in a timely way to potential economic developments.
So diving deeper into this, joining us now is Ben Ayers. He's a senior economist with Nationwide. Always good to have you with us, Ben.
Yeah, thanks for having me back.
Thank you. All right, so first question, what does this decision really mean for my money? Is it bad for borrowers, good for savers? What are we looking at?
Well, what we heard from the Fed today is they're really in no hurry to start to lower interest rates again. As you said, they've been held steady for the whole year. I'm probably going to see that continue at these levels for a couple more months. Yeah, it does mean good things if you're a saver because the higher interest rates across the board. But if you're looking for lower interest rates, lower mortgage rates, probably not going to see that till later in the year.
So the Feds meet again, like you said, in late July, and we're seeing those reciprocal tariffs. They will end July 9th. Do you expect then the Fed to make a decision maybe when they meet again end of July or maybe even in September?
At this point, we think July is still probably another hold.
Yeah.
That's what the market's pricing in. That's really what we heard today was not really any tee-up of a potential move from the Fed. I think at that meeting, we might hear a little bit of that, though, where the Fed might start to say, hey, maybe we're moving towards the road towards cutting interest rates again. That might happen, we think, in September. Maybe we'll hold off until October, but I think they'll be moving in that direction as we get later in the year.
And I know historically we've seen these interest rates really spiked a couple years ago, and now it's starting to come down. I mean, how much lower could we see the Feds lower this rate if they do at all?
You know, I think that's really the upshot of what we heard today and what we saw from the Fed's forecast is they think they're going to lower interest rates, and we see that in the chart here, our forecast and what the Fed shows, but probably not much. Probably just a few rate cuts this year, maybe one or two next year as well. So that still keeps us at a pretty elevated rate level. So anyone waiting for a mortgage rate to get back to 3 to 4%, we're probably still going to have to wait for quite some time for that to happen.
Hopefully those days aren't gone completely, right? We hope.
Hopefully, we'll see.
Keeping our fingers crossed. All right, we do need to talk about the situation in the Middle East because we know that that's adding to this uncertainty that consumers are feeling. We're seeing oil prices now go up. What are you expecting?
You know, it just adds to the uncertainty that we're all feeling. You know, we look at consumers, we look at businesses, they're uncertain about where prices are going to go, where our costs going to be. And if we're talking about higher oil prices, higher gasoline prices, that just adds to that unease. And so that's one of those reasons why we do expect that economic growth in the second half of the year will probably pull back a little bit, not to the point where we're worried about a recession, but certainly more people are going to be tightening their belts. And part of that is added in with some of these geopolitical tensions that we're seeing. So
what I'm really hearing from you is I might want to squirrel away some money here just in case.
It might be a good idea.
Yeah.
You never know.
Got to get bigger cheeks if I want to squirrel away more of my money. Okay, so they meet again end of July, September. Jerome Powell said today possibly looking at 2 more rate cuts maybe by the end of the year then.
Yeah, I think that's about on average for what people are expecting. Okay. You know, it could be a little more, it could be a little less than that depending on what happens with the numbers that come in, but certainly lowers the next move, not higher, but probably still not quite there yet.
Okay, good to know. Thanks, Ben. Always appreciate your insight.
Thanks.
Thank you so much.